So I'm sitting down with Jeff Booth, author of The Price of Tomorrow and also an entrepreneur. Thank you for coming in all the way from Vancouver, Jeff.
Thanks for having me, Max.
It's our pleasure. Well, before we get into a little bit about your background to help understand the lens through which you're viewing this issue of deflation and technology and the way that's going to impact society, I'd like to just get a brief summary of the book for our viewers so they can understand what we're going to be talking about today.
The book, you mentioned it, is called The Price of Tomorrow, Why Technology is Key to an Abundant Future. And it's about what's happening in the world today through the lens of, you see the divide in political spectrums, you see the divide of the social contract in our world breaking down. And it can be pulled back to technology is deflationary. And that's not a guess, that's a fact. And it rides an exponential wave of deflation. And so what that means is we should be seeing lower and lower cost and higher and higher gains, abundance, everywhere in our world. And why we're not is because central governments and monetary stimulus around the world that's trying to prevent that, because we've grown up in a world where inflation reigns, and we can't see that deflation could be a good thing.
I do think you make an interesting case for that in your book, but before we go a little bit deeper into exactly how you lay out your thesis, why don't we go back a little bit to understand, your background and how you came to these ideas?
My background is as a technology entrepreneur, and I've started numerous companies, one of which grew to over $500 billion of market cap. I'm on boards of numerous other technology companies. And in an interesting analog to what I'm seeing is engineers, there's something called the engineer's ring. And it's a ring that symbolizes our work has meaning, our work has consequences. And the story behind it comes from a bridge collapse in Montreal in the 1920s. And now when you're an engineer, you have to take an oath, kind of our work has consequences. And in technology, our work has consequences. And the consequences actually could be profoundly great. Every single technology company I'm involved in or helping entrepreneurs are intent on making the world better through technology. But if you look at what's going to happen out of the jobs because of technology, artificial intelligence, and what's happening, it's hard to square that peg, right? It's really hard because our job as technology entrepreneurs is to make things more efficient. And the technology that we're able to use today to deploy to make that happen come at the cost of jobs. I know today there's some people that say, oh no, don't worry, there's going to be more jobs in the future, more net new jobs in the future. I do not believe that's true, and we could go into that. If the technology can create a more efficient future, and we don't change our social structures or the way that our economies are built, then we're going to drive polarization into our economies. And ultimately, that's going to end in a really bad spot for society.
So is it this societal change that you think we need to make that was the reason that you wrote the book? Why did you decide to put pen to paper?
For my children, for the impact. My children won't grow up in the world that I grew up in. Unless there's societal change on this. How you get elected in a cycle like this of division is you create internal division in a country, and then that internal division isn't big enough to stay elected, and you need to blame another country. And so if you just look through the lens of what's happening in the polarization of the world today, Hitler is a good example in the 30s, right? Prey on, because people don't want to face the first principles, the facts. It's easy to drive blame and division into that. And so we have a structural change that's hitting society. And we're not talking about the first principles. We're talking about everything that's in the news is 2 orders of magnitude away from the first principles. That's why I wrote the book.
Yeah, and you really kind of start out the book with the first principles, some of them being the misunderstandings that we have about the way that our world functions and the way that it's going to function in the future, and then also, the truths that you try and lay out as your truths. So I think that's a great place to start to really dive into the meat of the book, that first section.
Well, so we grew up. I did too. My parents did. Their parents did. Their parents did believing inflation was good. My parents bought a home for call it $100,000 in 1970. That home is worth $1.5 million today. They got raises through their careers, paid back the home in future dollars that were worth less. And that whole path has driven a lot of prosperity in the world. So I'm not arguing the path. What I'm arguing is today the deflationary nature of technology is a bigger force, and nothing you're going to do is to stop it. So let's just look at deflation versus inflation from that concept and say, is it good or bad? And it's not good or bad. People win or people lose. Where you put your money matters. So in a deflationary environment, the value of your dollars goes up. And I would think that would be a good thing, right? Because it means goods and services are getting less and we get more for less. So when central banks around the world say we need to drive inflation, that comes down to we have too much debt in the world. And if you have deflation with too much debt in the world, you create a negative spiral. So again, deflation or inflation isn't good or bad. It's where does your money go to drive a better outcome. And so if you have deflation today, technology deflation, we can go into that is going to accelerate. And the only way to stop that acceleration of deflation is debasing currencies or spending money you don't have. Then the consequence of that is asset prices rising, stock prices rising, and everybody that has assets or stocks are winners out of that. So I'm a winner out of that. In fact, because at zero interest rate policy, the funds that are raising giant funds to invest in technology and take jobs faster have more capital because they're trying. So that whole thing is driving a faster feedback cycle, but it's also the divide of our societies. Because if you have assets, they're getting artificially promoted, and if you don't, you can't keep up to the rate of that asset price rise. So you're picking the pocket of some people and giving it to others, and that's why we have massive inequality in the world that's accelerating inequality.
I think one of the things you talked about is you called it, technology deflation. Not all deflation is the same. A lot of people, when they hear the word deflation, their mind immediately goes to the 1930s and the Great Depression, which I kind of call it demand side deflation. Right. There was people didn't have any money, and so to sell goods at all, you had to lower the prices. And so that deflation on its face looks bad. But the deflation you're talking about is of a completely different nature. What are some of the most important technologies I think people need to keep their eye on to understand the deflationary forces that are coming our way?
So I use this example in the book, but it's an important example because I've asked this question about what I'm about to pose tens of thousands of times to audience all over the world. And the question is, if I fold a piece of paper on itself, 1 times, 2 times, 3 times, a normal 8.5 by 11 piece of paper, if I could fold that paper 50 times, I can only fold it 7. But if I could fold that paper 50 times, how thick is the piece of paper? And most answers I get from all over the world are about there, couple inches. I've had a couple people say to the roof, but out of tens of thousands of people answering, no one has ever guessed to the sun. And that single piece of paper would fold to the sun. And it's an exponential pattern that Moore's law, or quantum behind Moore's law, but Moore's law for now is driving accelerating technology. Every 18 months, we get a double of compute power. And why that matters a lot, those two analogs matter a lot, is it's the same reason we misunderstand technology in the beginning. and there's a hype cycle in technology because the fold doesn't do anything. We expect something and it doesn't do anything. But if you now compare those two things, we're on fold 33 with regards to technology. So we're not in the small folds anymore. We're on the really thick folds. So the big steps in technology. So if you're looking back today and saying self-driving cars, all of this technology that's coming, you're looking backwards at the last 50 years. And the last 50 years in the next 18 months will double. And if you can't get the answer from a piece of paper moving to the sun, and nobody can get the answer from a piece of paper moving to the sun unless you've heard it before, then you similarly can't get the answer for what technology means going forward. So if you look at today, you talked about some of the different technologies. I would say it's a base layer of everything we do. In fact, I don't think people even realize that they're celebrating technology and creating the monopolies that we see before us today. Google, your searches are free, right? Then they add maps, then they add ways to everything is free that you're using. Amazon prices keep going down, then they add movies, then they add this. The technology companies today are celebrated for the same deflation that they're bringing to our lives. We're using them because of that. That is the product that we see, and we have this crazy belief that we can get deflation in some parts of our society and inflation everywhere else and run an economic model that we used to run. And going forward, if you think fold 34, fold 35, what's going to happen at the doubling rate of technology? If it took $185 trillion in the last 20 years to essentially stop deflation, so $185 trillion of monetary easing, debt creation, to get a nominal inflation rate. Going forward, that number is going to explode. And so you have a Ponzi scheme of debt creation, and at some point it's going to break.
So do you think the social consequences of that printing could come to fruition and slow down this deflationary cycle because of the social problems that will come to roost first?
So if you look at the newspapers today, if you look at most of what is in the news today, it's the social problems that everybody's talking about. Whether it's Trump on one side, Bernie on the other side, or it's the social consequences of what we're talking about that are rising and is creating divide in the world like we've never seen. Well, we've seen at the height of world wars.
Yeah, but those monopolies that you're talking about that are driving the technological evolution, which isn't inherently deflationary, what if, there's talk about breaking up these monopolies, and that could slow things down. And you get into the power of monopolies later in the book, specifically with regard to AI and how the importance of large data sets that are always being updated are extremely important. And so that in some ways, if the goal is to achieve some sort of, AI superiority, then you almost need these monopolies. And thus, that's going to slow down that deflationary cycle potentially if we have these sort of societal issues, which are clearly rearing their head faster than runaway deflation.
Yeah. So let's dig into AI a little bit. And so it's one of the things, not the only thing. There's a whole bunch of deflation coming, but let's look at AI as a first principle. And so the way we learn is through error correction. The more you practice, the better you get through error correction. But we can't see all of the data sets. We have to choose to see certain data sets. AI, as it adds more and more data sets, it's actually the same thing. It's error correction at scale. But if you talk to I'm friends with many of them. If you talk to top AI researchers, then somewhere between 5 and 20 years, we're going to have general purpose AI that's better than us at everything. And so if every job, 5 and 20 years, that's not a long time scale. And if every single job is a function of our intelligence, and it's hard not to see that, right? If every single job is a function of our intelligence, and we're going to have AIs that are more intelligent than us, how can you logically conclude that there's going to be more jobs in the future? And so that path is going to, and so today economists compare general purpose technologies, AI and electricity, and say we've been through this before and the policy tools through electrification worked, right? And yes, there was retraining that needed to happen and everything else, but were there no jobs in the future? But I think it's foolish to compare electricity to AI. Nobody said electricity is going to be smarter than human beings. So electricity was an important breakthrough as electrification created new industries and everything else. But nobody ever said electricity, two things. Electricity wasn't doubling its performance every 18 months. And nobody ever said it was going to be smarter than humans. So I think it's a bad analog. But if you think that the policy tools that worked in the 30s to be able to bridge societies through that transition will work again in this transition, I think you're not looking at the first principles of what's happening in technology.
And AI is one of them. Another interesting area of deflationary technology that you get into is energy. And energy in itself also feeds back into a lot of the other technologies which could be deflationary. I think it's important that we talk about that as well.
So there is no life on Earth without energy. But for years, we didn't see the consequence of the energy and all the jobs of energy. We dig up all of the energy, or not anymore, but most of the energy from plants, animals that got the energy from the sun before, right? And that whole job, exploration, refining, put it in your car, all of that produced a lot of jobs. We didn't see the second order consequences of those jobs. And then energy itself is about 9 to 10% of any economy. And the race for lower cost energy is a critical matter in economics. It's what drove the race for coal. It's really hard to stop a race for oil, race for all around the world, because if you don't have lower cost energy versus your competitor, your economy fails because it's core to everything. We now have solar energy that is on par with the lowest cost energies in the world and following that same exponential trend of lower and lower cost. So the whole infrastructure of digging things up, refining them, having offsets and everything to the environment and all the damage that costs, in the future will look foolish. There's still going to be a massive transition time, but today, that has a huge consequence for if you're adding deflationary net nature of solar. Once built, you're not bringing coal to the solar farm, and so a lot of different jobs go away, and it adds deflation. Right? It adds to all of the other deflationary trends that we're seeing. So I just don't see how governments are going to stop it. But the other side of it, why is it a bad thing, right? If you think about the abundance that could bring you, if you think about the abundance in your life that could bring you with lower and lower energy costs to, at some point, potentially being free energy, why is that a bad thing?
I can't personally think of any good reasons, but there are some counter arguments that people would make that new commodities are going to become more important as new technologies arise, and that solar panels and the battery technology that we're going to need to store that energy is made up of these different minerals, which we don't mine at the rates that we're going to need to mine them at. And so you'll see the inflation come from other areas. So yes, oil might be in a secular downtrend and declining in price, but you're going to see that price of oil is going to make its way into other commodities. How do you
So I think that's actually, so if you add up all of these exponential technologies that are in moving, we are in a secular downtrend trend. And if you said today we have all the jobs of the traditional industry and all the new jobs of the build out of the new. So I actually see right now, that's today, and that's happening in a number of different industries. Tomorrow it won't look like that. Once you hit the breaking point of some of these technology, it'll change dramatically, and it'll drop all of the existing jobs. And so I don't see. I would love to have this debate, but I don't see where the jobs are in the long term that create net new jobs globally, net new high-paying jobs globally. And for our existing economy to work, the way around inflation, that would have to happen.
So it's not a short-term a switch to, you acknowledge that a short-term switch to solar could cause inflation in certain areas, but over the long run, these trends are inherently deflationary, and that will win out over time. It's not that this is some short-term thing, that deflation is on the horizon next year. Not that you couldn't see these same forces playing out, but it's not like it's going to take over tomorrow.
But I would ask you this: you would already see it. So $185 trillion in the last 20 years has been created to be able to increase GDP around the world by $46 trillion per year. So just ask yourself, what would asset prices look like? What would the deflation, inflation look like without the $185 trillion? You would already see it. What my premise is that's going to accelerate. Today we're stopping it. Central banks all around the world, whether it's US, whether it's Euro, whether it's China, whether the printing press is on, trying to stop that from happening. I suspect it's going to stay on. I suspect because we can't see the different way we need to construct society, that we're going to keep taking the short-term juice until it breaks. But you would have already seen it without that printing.
If they're going to keep printing, what's going to break first? Is it going to be these systems that we have now, the central banks and the governments as they exist, or is deflation going to run away beforehand, and these governments are going to have to figure out how to deal with it? Are we going to restructure before the deflation hits?
So I think the restructure happens in a different way. I think so unfortunately, I hope I wrote the book so that we could have really critical debate around core issues, rather than the secondary effect that seems to be driving the debate today. It's better to use an example here, right? And Blockbuster, right? And everybody talks about Blockbuster and their 9,000 stores and why they didn't see Netflix coming. But Blockbuster, for the time that grew their business, 9,000 stores was the thing that was driving the business. And at the time when they didn't buy Netflix for $50 million, download speeds, remember download speeds? Netflix wasn't delivering videos through technology, through download speeds. They were mailing videos. The business didn't make a lot of sense. Blockbuster missed the exponential trend of technology, what would happen, that made their business irrelevant overnight. And by the time it was irrelevant, it didn't matter what they did. And so what they did is added candy aisles to the stores, right? And it's easy to look at, and just delayed their collapse by one year. It's easy to look at these examples in creative destruction in companies where the smartest and brightest minds can't see it, right? But if you actually just zoom up a level, all of us have been in an inflationary environment all our lives, right? We can't see it because we don't question these things because they've always been true. And so so I would say what's happening right now is that there's a structural change so great that's happening to society through technology that people can't see it. And so we stay on a path and making tweaks to an old system, similar to how Blockbuster added candy aisles to their stores, thinking that's going to solve it. And so, if through that lens, if you see what's coming, and why you might be trapped in a bias as well, which is really easy to see how we all get trapped in those things that we don't question anymore and move to the next thing. It's just an important time because we've never seen technology like this.
Well, I'm not, really pushing back against that idea. I'm more trying to get your input on what is going to what is going to happen first is the printing, which is offsetting the deflation as we see now, going to become the societal issue that will cause a restructuring before we see the deflation, or will the deflation be the thing which makes the debts untenable, and thus we have to start thinking about not literally restructuring the debt, but restructuring society first.
So, and I didn't really want to, so, but I will. I will.
Okay.
The printing is, these are probability distributions, right? This is, I can't say, I'm not going to say this is going to happen or this is going to happen. I wrote the book to hopefully drive a debate that this doesn't happen.
Yeah.
What do I suspect is going to happen? Printing is going to continue. But printing isn't just going to continue. It's going to accelerate to a rate that is staggering. That printing all around the world, whether it's China, Japan, everything else, will rise into asset prices and everything else, and further drive inequality, and society is going to break. And when that happens, people vote for people who say it's not your fault, it's their fault. And once people believe that it's not your fault, it's their fault, it's hard to unring that bell. And so what ends up happening is you break society, and that ends up in revolutions and wars. That's unfortunately what I suspect is going to happen if we keep playing the game we're playing, because the force of deflation is so great. It's like we're trying to stop gravity by flapping our arms. We're not going to stop it. So without a realization that we're not going to stop it and rebuild society in a different way to take advantage of it, society is going to break.
So I think that's a great way to get into kind of how you ended the book, which is with your the way that you talked about just now what you think will happen, but you did lay out some examples of ways that you think we can think about restructuring ourselves as a society to deal with these deflationary forces. What do you think would be the way without revolution? What is that going to look like?
So if you go back to, is deflation good or bad, right? There needs to be a reset of debt around the world, or something to be able to bridge. So I'm not suggesting that it's one thing, but I did lay out a simple premise. It's going to sound crazy, but I think we might be asking the wrong question. Governments all around the world, every government, how do we protect our high-paying jobs, right? How do we gain more high-paying jobs? And as a consequence, in a deflationary world, we need to print to be able to do it, right? We need. But what if we're asking the wrong question? What if the question is, how do we build a society where we don't need them, right? And so what if we let deflation happen and prices just kept going lower and lower? And we, as jobs fell out of the market, you didn't have to have this massive transfer of wealth from the rich to the poor to be able to drop the people that were left off of the path of deflation. Because if it's true that technology is going to do more and more of these jobs, wouldn't it seem logical to build a society where we can benefit from that technology instead of stuck in an old framework where we have to drive higher and higher paying jobs when we know they're not going to be there? Why don't we let it happen? In fact, capitalism itself would work perfectly there. We don't live in a capitalist society anymore. We live in crony capitalism where if we are printing money, capitalism itself, allowing things to fail, and where you're actually paid for your difference in ingenuity and everything else, not because you have assets that were artificially priced, would work perfectly if you let deflation happen.
But what if we're starting from a place of too great of inequality, where the people at the bottom of the pyramid don't have enough as those deflationary forces kick in to be able to survive? If prices drop to zero immediately and we go from a world of scarcity to a post-scarcity capitalist economy immediately, and everything costs next to nothing, then yeah, people can live off of their savings, their they're non-existent savings. I mean, people don't have any money at all. There's huge amounts of people who have less than $500 in savings. That's some serious deflation that we would need to be able to go to a world where $500 in savings and no job is going to be able to get you through life.
So let's dig into that a little bit more. So today you have a problem, and let's just take what you just said. There's a whole bunch of people without $500 in savings, and I agree with that. There's a whole bunch of people. How will artificially printing more money solve their problem? Right? Because what you will do there is house prices will go up, stock prices will go up, rent prices will go up. They don't participate in any of those. And their dollars will be worth less and less as you drive inflation, and they won't be able to. So the current path cannot work. That's what I'm getting at. The new path, how we transition to something. I'm not saying there's too much debt in the world today. There's over $250 trillion of debt in the world to run an $80 trillion world economy. That debt is going to have to be figured out at some point on a transition. But what I'm saying is that transition is going to happen whether we like it or not. Your show talks a bit about Bitcoin. I believe it's one of the things in my portfolio. It's my hedge against this. It could go to zero. It could, but it has risk. It has up and down risk. But I actually believe it's one of those things that as governments debase their currencies, and they're going to have to continue to do so, then what is a currency? It's just a trust in an exchange rate. I lend you my money. I lose utility of money today, and you have the inverse. You gain utility of money today, which you can spend, and you lose it later with interest. And if that's an exchange between us or countries or companies and everything else, and you pretend to, if you change the denomination and you change your utility of money to pretend to pay me back, I start to lose trust in the currency. And that currency breakdown is likely what's going to happen at some point. So whether it's Bitcoin or a form of trust, that I see that as a really good hedge against what's happening, because at some point the existing system is going to break.
And I don't disagree with you there, but I was more trying to get at, you said without a transfer of wealth. That was the phrase that I kind of touched on, and that there is a group of people who no matter how deflationary we get, there is going to have to be some transfer of wealth, or it doesn't matter if we restructure the debts. They don't really care about the debts. They care about being able to afford a house, being able to afford healthcare, being able to put food on their table, and even if we restructure the global debt and people stop debasing the currency and we have cheap prices, they're still not going to be able to do that. And so the natural, I mean, I'm kind of leading into UBI and those sorts of other things, but I think that in the world that you're describing, it's almost undoubtable that those things would be a part of it.
Well, let's look at both sides of the political spectrum, right? And or the socialism versus capitalism. And on socialism, so if a large part of the population drops out, and there's only a few people at the top making an enormous amount of money, then there's either going to be revolution, where those people take the money, right, and that can at some point in the future, and that's going to come in the form. First, it's going to be way higher taxes on wealth, right? That's the whole path on one side of the political spectrum, way higher taxes to pay for the people that have dropped out, right? That's one part. And if you add to that more and more jobs are going to leave, and more monopolies out of artificial intelligence are going to be created, there's going to be very few people at the very top, right? So that's the path. That's the path that the current world is on. And so what that looks like on that current path on the socialist side is more and more taxes, more and more taxes, more and more taxes to pay for the other. And if you don't do that, revolution at some point. On a capitalist side is it's hard to see I'm an entrepreneur. It's hard to see what you believe is created from your ingenuity being given to somebody else. So less taxes, and more in a free market. we don't live in a free market anymore if you have to produce $185 trillion of debt to create growth. So a free market would be you didn't need to do that. And so both right now, and what you have is, if you talk about UBI as an example, UBI says, okay, let's give everybody a working wage, and that'll make the problem go away. But if you think about the trying to make that happen in society today, right? So imagine a person wants to live in New York because they think jobs are higher, prospects are higher there, but also the rents are way higher here, and they don't have a job. Do you pay them more, right? Or somebody that has a needy child or something, do you pay them more? So because you're taking from the wealthy and giving to the left out of society on UBI, you raise a whole bunch of cornucopia of other problems that divide society further. But ultimately, if you look at the inflation-deflation debate, right, instead of that, and you say where we're going, then UBI, all it does is sits on top of the existing system that we've had forever, right? And it doesn't talk about a first principle, right, from which deflation is. So if we're going to have deflation, now UBI might need to be there as a transfer to something else. There might be a whole bunch of other things that are needed as we transfer economies. But if the underlying thing is it's going to be more and more deflationary going forward, I don't see why we should talk about that, right? Because that's the most important thing to how societies are built today, or how economies are built today.
I guess what I'm saying is the revolutions will be perpetual. If you don't have some sort of UBI, that the revolutions will be perpetual in this deflationary world, because exactly. once the deflationary forces are truly understood and people aren't taught this other side of things, then will you even move to New York because the jobs are better, or are you moving to New York because you like nobody's going to be looking for jobs? You'll have no motivation to look for a job. The chance of success in you becoming one of that top percent of people who is able to participate in this kind of end game economy where things are automated, AI is thinking for us, and energy is extremely cheap. So
these are hard concepts to grapple with, but it doesn't make them not true. And so economics is driven by scarcity, and technology creates abundance. And so we're sitting in the studio right now, and the most valuable thing is the air we breathe. Without it, we die in a couple minutes. Yet it's free because it's abundant. And so through that lens, and it's hard to see, you could create a model for air or oxygen underwater where it's scarce. You could create a model for oxygen if we pollute our air so badly that it becomes scarce. But without that, it's free because it's abundant. And technology creates abundance everywhere. And it's going to be, it's not just in your phones anymore. Look back and look at your phone. Like, it's hard to believe that my first phone was $2,000. My first phone bill was $1,200, and all it did is made phone calls. It's hard to believe what I have free on my phone today, and that abundance. That technology isn't now just in our phones, it's moving to every part of society. And so why wouldn't we logically expect that to see that? And if we could see that, we could drive a really exciting future, a future of abundance for everybody. The path to that is going to be challenging. the path to that right now, if you look out your window, if you look at the political divide, not just in the United States, but all over the world, it's already there, right? And burying our heads in the sand and saying that's not going to get worse, I think is ignorant. I think it's going to get a lot worse.
Yeah. Well, it sounds like we're really discussing a world that's post-scarcity, and that a post-scarcity world, a lot of the economic concepts which we hold as truths are proven to be false, and that we need to reconsider how we restructure ourselves moving forward to understand this new world of post-scarcity economy.
That's the debate we should be having. That is a debate at political circles around the world, at all sorts of. That's a debate we should be having. It's an important debate.
And I think that's kind of, if you look at the candidacy, the former candidacy of Andrew Yang, that's what he was trying to have, with him throwing himself into the ring, and now the Democratic debate has gone a little bit back towards, looking at the symptoms,
Exactly.
the symptoms of this deflationary issue, and Yang, to me, this is all personal opinion here, but Yang to me was the one who was looking at these causes of deflation and saying this is what we need to be talking about, not these really symptoms of the problem.
Even if his policy response on UBI might not be the response, at least he was somebody that was active in the debate around the first principles. And I agree with you. It's an intellectual debate around what we need to do rather than throwing stones.
So we're going to change pace a little bit here. And you talked about Bitcoin a bit as something that you hold in your portfolio. And I do want to couch this part of the conversation with the disclaimer that you're not a financial advisor, hedge fund manager, but you are an entrepreneur and businessman. But how are you looking at, in a world where this deflation is going to be a force, how are you looking at where you're putting your money, the types of businesses that you're investing in, the time horizons that you're looking at? How are you investing around this?
So if you think about what we've talked a lot about, what will central banks likely do? And so if central banks don't print, then I think you would want to be out of the market. You'd want to be in cash, right? But they will likely print. So you need to be in the market. But the game is actually not what's happening out here. The game is what our central bank's doing. And so if you take that to its logical conclusion, so first of all, what companies would I be in? I would be in a bunch of the companies that I'm involved in, or technology monopolies. I would have all your listeners, readers, look at network effects. And a network effect is, a telephone works on a network effect. It's worth zero if I'm the only one with a telephone, and worth more, and the value of the network increases with each additional user. And so if you have a telephone, you and I can talk. If one other person, and the internet itself is designed with really strong network effects, as are the big monopolies on top of it. So most of the value that's been created in monopolies are around network effects. So I look for network effects in companies, or design around network effects in companies, and I've had tremendous success in my own portfolio around companies that demonstrate that, because the value to all users keeps going up and up and up, and as a byproduct, their algorithms get better, and as a byproduct, nobody uses a second place algorithm. Right, and so there's still lots of opportunities for companies to be created into there, and I'm really excited about the technology companies I'm involved in. Really excited about that. So I would have money there, and then if printing is going to happen, you need to be in the market. But then I would look at what is the logical next step from there. The logical next step from there is, at some point, taxes are going to have to go way up. So if you have, let's say, you're investing in real estate, and real estate has been an asset that, if China's going to devalue their currency, which they're going to print money and devalue their currency, then holders of that currency in China need to get it out of China, and they need to put it somewhere. And it goes into our real estate, and the real estate goes up, and then our rents go up and everything else. And so those things are likely to accelerate, and those things are likely to continue to happen. But because you can't move it, it can be taxed. And so taxes at some point down the road are going to go up, as well as you try to pay back all of the stimulus and debt that you're producing. So I'd be careful of how all in I was on any asset class like that. And at some point, the moving around deck chairs of the Titanic about the monetary policy is going to break. I don't know what that point looks like, and so but Bitcoin itself works on a network effect as well, and so the more and more users of a system increase the value of the system. And so Bitcoin overall actually has that potential to operate on a network effect and then at some point drive massive trust in it. And that trust might be from currency holders in Venezuela who Bitcoin last year lost 30% of its value. It didn't lose 1.8 million% of its value from the inflation rate. So those people won. They could move the currency. It was life-saving for people in Venezuela. So that might happen from a whole bunch of different countries. It might happen from people in China getting into it so that they can move and save from currency devaluation. And at some point, with enough people using that, whether it's a currency or not, whether it's a hold of value, store of value that enough people trust, it could just change the game over it all. So I look for asymmetric bets, almost unlimited upside and limited downside. And if I said, where is the gold market today versus the Bitcoin market today and what could happen, it's an asymmetric bet. So I hold some of that in my portfolio.
Wonderful. Well, Jeff, it was a fantastic read and one that I very much enjoyed. Thanks so much for coming in.
Thank you very much.